For a global perspective, we'll turn to UBS Investment Bank Chief Economist Lawrence Hatheway. He joins us from our Washington newsroom. Larry, welcome to Bloomberg News. Good to have you on.
Great to be here.
Our economics editor, Michael McKee, is keen on telling me time and time again, Mark, you have to read between the lines and read between the numbers. If you look between the numbers, talk to us about where you see the U.S. recovery.
Well, it's uneven, and it's a recovery that is particularly robust in areas like corporate profitability, and it's particularly weak in areas like employment, and of course, as we just heard, in the housing market, notwithstanding today's numbers. The reality, I suppose, is that just leaves us with sort of an unsatisfactory growth rate, probably around 2.5% in the second quarter of this year. We probably, for the full year, may see that rise up to around 3%, but generally speaking, I would say a lackluster recovery is the best way to describe it.
And that is a sentiment that Fed Chairman Bernanke expressed last week when he was on Capitol Hill.
He certainly did, and I think what he emphasized was that the future is even more uncertain than ever. And for those of us who engage professionally in forecasting, that's really saying something because of the difficulty we have looking into our crystal balls. But there are good reasons for that, right? Households are still trying to work off leverage. Banks are still encumbered by the regulatory environment above all. Firms may be cash rich, but they're not really willing to spend. They too are also cautious about the future, and so it all adds up, as I said before, to something that, we prefer to be better, but we'll have to accept for what it is.
Larry, when you talk about how hard it is right now to try and figure out where the economy is going, I mean, that's been reflected definitely in the sentiment from economists this year and the projections, which initially were optimistic and then swung to wildly pessimistic and now are starting to improve once again. I mean, how can we really be sure of anything at this point, given how uncertain, as the chairman pointed out, things are?
Yeah, the markets themselves obviously experienced some of these big swings in sentiment, from a degree of optimism back when the market had finished its strong recovery in the spring of this year to the recent sort of pessimism from which we're now perhaps beginning to bottom. And unfortunately, that is, I think, the nature of markets, that they will move around quite a bit. I think as economists, what we're really focused on is whether the U.S. economy can now begin to generate jobs growth. We actually need to see a transition from what has helped us get as far as we have with regard to the recovery, which is policy stimulus, and it is also a rebuilding of inventories. We now have to have final demand, which is a fancy way of saying that consumers have to hold in and continue to spend, and businesses have to join them. And for those two entities to engage in that activity, they need income. From the business perspective, it's a little bit easier to see. We're in the middle of reporting season now, and corporate profits are very, very strong. The income is there to spend, but companies will only spend if they're confident about sales, and that's where the consumer comes in. And for the consumer to spend, we need jobs, and so far that's really the piece that's been missing. A very uneven jobs recovery, a very disappointing one, and it had better improve, or else obviously the pessimists will begin to hold upper hand again.
Larry, just to ask you briefly about what you're talking about in terms of corporations. I mean, we heard from FedEx just today, we heard from UPS recently, and also in other sectors we've been hearing from companies that have been raising their forecasts and getting more optimistic. So what is it going to take to sort of push them over the line and start hiring and start feeling more confident?
Well, we think they will. I mean, to be fair, we certainly think that jobs growth for the rest of this year probably should exceed 100,000 per month in the non-farm payroll series. Partly it's because they are making money and they are seeing an increase in their sales, the companies that you mentioned and others as well. Partly, too, because we still believe that if you go back to the recession, to the depths of the recession, that firms aggressively and overly cut their labor force. If we only knew sort of what the relationship was between GDP growth and employment for the post-war period, and then had seen what had evolved in GDP growth since 2008, right, we would not be sitting with an unemployment rate at 10%. It would be lower than that, probably closer to 8%. So we do think that firms have some more hiring to do, and I think it's going to come.
Larry, could I ask you in our last minute about Europe last week, those bank stress tests? Were those stress tests stringent enough? That has been part of the criticism.
I don't think so. There were two areas where I think they were not stringent enough. The first was that banks could declare some of their holdings of government bonds as to be held for maturity rather than the trading book. And if some countries, and perhaps Greece is one of them, may have to restructure in the future, it won't matter whether it's in the trading book or whether it's held to maturity. There will be a loss that has to be taken. And I think in that sense, the banks got off a little bit easy. The second area is that we're not really looking, I think, when we think about stress tests, at just what's going to happen to growth over the next year or so. Countries like Spain, Portugal, Greece, and others are going through a multi-year, very difficult adjustment that's going to cause a great deal of credit stress within the household sector and the corporate sector, and that will feed back on the banks, and that's not captured in these stress tests.
All right, Lawrence Hatheway, UBS Investment Bank's chief economist, joining us this afternoon from our bureau in Washington. Larry, thanks so much for your perspective. We appreciate it.